the long and short of it is that if you decide not to look at the small side of the market, the smaller cap companies under $100 million market cap, you're going to miss out some of the best assets that the majors are looking for.
Well, hello viewers tuning in for this session for One-to-One Money Investment Americas. This forms part of our online content for the 2021 event. I have with me today Daby Carreras, who is a wealth manager at Spartan Capital, a long-term investment advisor based in New York with a deep knowledge of investing in many asset classes as well as natural resources, of course. And today we're going to be understanding some of the private wealth and high net worth sentiment towards exposure for metals and mining companies. Daby, thanks a lot for taking some time to chat with me.
Absolutely, Adam. I can't possibly think of anything better to speak about on a brilliant, beautiful day here in this world in New York. I'm from Lower Manhattan, so right behind me is Brooklyn, and it's beautiful. So,
how's the high net worths, the investors that you work with, your clients? How's the mood? What's the sentiment like towards metals and mining at the moment? You know, we're in a bull market here for most commodities. Is that suddenly meaning that you know everyone's calling you up? Are they looking to position into other stocks? What's the view?
Yeah. People are looking for that transition. They're wondering when it's going to actually happen.
Right.
And I'm saying to people that it's happening over a period of time of 3 years as the spread literally moves because China is no longer going to be supporting their supply chains. So these are all going to move over to better tax jurisdictions, which makes majors really look for feeders and other places to deploy capital and build up the assets, because as gold moves up higher and higher, and I think that gold can move substantially high, upwards of 3,000, which will move silver and probably move really hot into the point of copper. So copper, gold, silver, and all these other different metal and mining assets that are coming to fruition, everything from long ways out in cobalt and lithium, and even shorter with lithium, but to the right and now and center of what's going on with gold, silver, copper, and a lot of different other hard assets and precious metals. Everything from numismatic to mines, people are asking about.
Yep. It's interesting, and it's an exciting time for the sector. But how did you get into the sort of smaller resource stock plays, or like the smaller companies? Is it purely about the appreciation, the value that you can create for your clients? You mentioned some of the larger caps as well. Do you prefer to have a mixture within your portfolios of what you hold, or do you really like the junior companies, the growth stocks?
I like them all because they all have a little piece of the puzzle to the market. You could be agnostic about a lot of the metals and mining now, because, I mean, I saw an asset the other day that One-to-One was putting on, and it was a company that was just it was a Dominican Republic asset. It had two little mines. It was a little tiny bit of gold, but the thing about it is the jurisdiction made it valuable. So the amount of gold was not necessarily insignificant, but the jurisdiction is valuable for the majors, because I can't even tell you how many different majors are necessary. So even on the small side, like I'm saying, you know, a company, a tiny little participant kind of company, to an Abbott, a King Ross, or any of the Kirkland, all these places, they need these tax jurisdictions so they can actually grow because of what's happening. Instead of like set in 2007, when I was doing on private side, we were dealing with $100 million deals. Now we're doing $1 billion transactions because success puts a proper price in its goods. And now it's a conversation really around cash flow, because we're going to be living in an environment with essentially a zero interest rate rise environment. It's very, very tight. So retail brokers, and where I am, I'm the retail side, I've just gotten bigger and bigger in my advocacy, to answer your question. And as that has come, I've been taking more and more dollars, more and more assets, and just growing the business. So they're all important. They're all essential. And the long and short of it is that if you decide not to look at the small side of the market, the smaller cap companies under $100 million market cap, you're going to miss out some of the best assets that the majors are looking for, that they can just put them right into the folds and feed because they need that tax jurisdiction. If they haven't done their debt financing yet, because them all, they need about $50 million just to do the debt financing going.
Yeah.
They're going to be at a disadvantage of what's happening in the market. So all those come into play, especially the advocacy and growing up your book of business is extremely important. And that's what my high profile clients, the billionaires, the royal people, sovereign nations, and celebrities, many sports and athletes and rappers and whatnot are all interested in. I mean, it's very easy to tell a famous rapper or an artist that, instead of buying, another, $300,000, $400,000 worth of stock in one of the names, why don't you buy yourself another gold chain or buy yourself something else, because they can resonate with another gold chain or something in that realm, because not only they get to wear it, but they see the appreciation of it over time, and it's very stable because it's in their hands. So these are things that are people looking at when we're looking at the space where blockchain, big token, Bitcoin, all these different things. Yeah. Great question, Andy.
Yeah, it's interesting. And it's good to hear that the companies are getting, a bit more attention and a bit more love, I suppose, because it was a bearish sort of period with a lot of reputational damage after the last upcycle. But look, let's talk about maybe the commodities. You mentioned gold and precious metals. I assume that's kind of like the entry point for the generalist. Because of the nature of gold and because of the sort of the understanding of it, and maybe also gold as a hedge, but then I'll move into the equities. How is precious metals like the main bulk of what you invest in, and how do you get to this $3,000 gold
projection? Well, the way I got it is essentially the space is narrowing, and as the space narrows, it collapses on itself, and it can essentially make a short squeeze to double like it has. I mean, I remember when gold was only 300, now being upwards of 17 and moving stronger, I can only see it doubling again from there. So I know it's an arbitrary number there with just saying 3,000, but I think it moves up higher. And I think that silver could actually be even better for the short period of time, which we haven't seen in a number of decades.
Yep.
So my book, matrix was, I normally just kept about 10% in cash or 10% in gold and money, real money, which is gold. Gold is money everywhere. So I always kept 10%, but I realized I'm adding more and more gold to my assets in my portfolio because people are adding more risk to their portfolios. And I don't think that people realize how much risk they've added to their portfolios. And because of that, I think that major volatility is in store. So I'd like to damper it down and have pure protection, because that people don't really truly understand that gold is the asset class out there. I mean, there's 4 asset classes to me. There's 4 asset classes. Most people just speak about the 3: real estate, debt, and equity. And everything is a derivative of that. But gold is an asset class. I mean, the amount of gold that's mined in a single year can fit on your table, your dining table, Adam. Granted, it's worth a couple of $1 billion, but the thing is, it's not in people's hands. And that's what has to happen. Now with the advent of BitToken, it's people are coming more to the realization that you can put it into your hands, and they just have to calibrate it, or I would say, I don't want to use the word confiscation, but really regulation towards it, into the treasury, so people can actually officially realize that they have real asset instead of anomalies that are up to speculation like the Silk Road and the black markets that Bitcoin and blockchain have had for a long time. You got to make it real for people to understand. So my portfolio is getting bigger and bigger, a lot more than just 10%. So I have a multi-million-dollar book of business, and pretty soon after the election, I'll be able to manage 300,000 employees, which be upwards of tunes of $247.9 billion, or close to $250 billion for pension companies, insurance companies, for the city, for people. And by making the world realize financial literacy and making the world understand, especially the city, and being that mouthpiece, you can make the city come back to life again. And it will be the biggest gold rush the world has ever seen.
Yep.
So synonymous with the California gold rush right here to New York for business, because that's what you're supposed to do as a comptroller. You're supposed to create business and be accountable. And that's what I do. I mean, that's what I have. Compliance.
Yep, absolutely. Just for the benefit of our viewers, you're running for the comptroller, the sort of CFO role of New York City, which is excellent. And taking that sort of appreciation for gold as an asset class, as you said,
Yeah.
into that role would be quite essential, I guess, because, let's talk about public funds and or pension money, sort of the large pools of capital that were into gold, were into mining, that perhaps moved out of it after the last cycle. A fund flow is coming back. Appetite's coming back surely for gold mining companies now.
Totally. I mean, and all different spots. I mean, you could be really agnostic if you want to buy a metal and mining company or even a metal company that has to do with the play on the tax jurisdiction. You can find one. If you find one that has a great play on management, you can find one. If you find one that has a feeder play in whatever it is to a major, because the location is where a major likes, you could find it. Like I was saying, you can find a tiny little asset in the middle of an island, a gold asset, that can be very valuable for the tax jurisdiction for a major. And so you have to keep open, you have to keep your head on a swivel, and you have to consistently engage with these companies. And that's why one-to-one mining is amazing for that. I really salute you, Adam, and Charlie, who is a big player and integral in there, Charlie Hastings, to really set up meetings. And I love it when I go and see what's going on in Africa. Super sorry. Going to see what Africa, seeing the different places that you do at different times, Hong Kong events. All your events are so awesome because it's what's going to carry us to the next level, because it's quite important.
Yep. Let's move then to the energy transition, which is the other kind of driving force behind the mining sector at the moment. And the mining sector has got a lot to answer to if it is to meet Biden's new green stimulus. The energy transition is a movement. It's global. And, if we think about the Paris Climate Accord and a lot of the policy that's coming out globally by world leaders, we got to decarbonize and we've got to electrify. Mining's got a challenging position to meet those goals with the metals. But how do you, as the wealth manager and the investor, how do you see investors' appetite changing towards that? You mentioned silver before as a precious metal, but obviously it's got an industrial application. Are there other metals that you like within the
totally
complex?
Yeah, I mean, when we think about it, we think about lithium and a lot of different companies. Sometimes you think about the amount of the penetration. Sometimes you never get more than 5% penetration for some of these assets. Granted, it's a couple of $1 billion, but if you don't get more than 5% penetration, it's hard to really try to make a market or hold your ground in it. So it's important that as the new wave of investors come in who are really interested in having a $25,000 vehicle. So that talks about lithium, that talks about cobalt, and these are 10 and 15-year out portfolios that you should really can trade, because when it comes to cobalt, which is very integral in batteries and what's going to be necessary, a lot of different components, but that's the extent. I don't care if it goes from $20 to 40 and come back, because the amount of cobalt in a car for 25,000, if it got to $300 for cobalt, it'd be insignificant to the overall cost of that car if you're looking for a millennial car, 25,000 for the lithium. So do I really care if cobalt's at 300? I want it to be economical so we can actually pull it from the ground and put it to use and put it to work, because it makes the environment safer, it makes it more efficient. So things like this is so important. Things that, people like Elon Musk, I mean, a lot of people don't realize there's like 6 to 7 other baby Elon Musk's companies, Tesla companies out there that all have to be vertically integrated. So these things are instrumental and for batteries. And we're only talking about one side of the battery. There's the anode and the cathode. So that's a whole other business to get ready to go that people still have to really be mindful and understand. So right now we're still talking about the healthcare space, a lot of different things in energy and oil, but it's really time to get back into business, because all this printing has to come to roost. And when you see major countries like PRC really staying away from supporting its supply chains and just going out there and just trying to be like what United States is or has been. The production is coming here. Think about it. Now we're starting to see people produce things here like we never did before. Like we just recently were a net exporter on oil. Now, granted, there's some stumbling blocks still because of leadership right now, but we should be creating more things like 3D printing, even on that side. We're creating things. We're all original manufacturer. We're all producing here now, as opposed to what we weren't doing for a couple of decades. We're just out there buying it. So it's quite interesting how the market is recalibrating. And I think as the 10-year Treasury note gets closer to 2, we can finally move out of the relief area and into the point of stimulus. Sorry, just a nice little helicopter flying up behind me. I'm not sure if you can see it. But
yeah.
I appreciate the helicopters now because they used to have not thousands, but hundreds of helicopters all the time down lower Manhattan, and it became silent and quiet during the entire Corona time. Yeah. And I want action and I want more activity, and seeing small helicopters flying from, it looks like it was coming from Brooklyn into New Jersey, Staten Island, makes me happy. So I don't mind the intrusion.
Activities coming back, signs of life, right?
Yes.
This is good. This is interesting. But the metals going into making more helicopters on US soil is potentially the challenge. It sounds encouraging what you're saying around more production coming online and coming back to the US. Nevada recently announced as the most mining friendly jurisdiction in the world, which is great. But there's a long period of lost time to make up for here in terms of, I'm thinking just big picture, like the Texas disaster, the grid infrastructure. It's not quite there. It needs investment.
Precisely. This infrastructure bill has to be really big. It has to be like $2 trillion to put it back. I mean, if you think about Arizona, the star in the Arizona flag is a copper. It really signifies the coppers there. Copper is a major thing for infrastructure. And I think it's going to be white, hot, spicy to the top and really bumble up because it's been building a base for some time. And I'm expecting to see it boost up and really help people go to the next level because I love copper gold. And there's a lot of copper gold assets out there. These kinds of things are important because this is an asset class, and having copper part of that copper gold asset, which I love, it really says a whole heck of a lot about infrastructure. And I'm excited for when the bond desk can actually take, we're about 40 basis points away. We still need the GDI moving up higher for the GDP to really show that we're into the point of moving away from relief into stimulus. And then I want to see the stimulus bill being like a safe and sound bill for really not the United States, but really the planet, because that shows us that we're back and working and the economy is back and running and we're not having smaller local municipalities shutting down the economy while the market's still running, because then the competitive advantage is impossible to beat that barrier of entry for the smaller investor, or even for a very wealthy investor who is not paired up with the major institutions who are really showing that they're about fees more than anything else with their new products that they're putting out. I'm really happy to see things like Reg CF come about and being upgraded from 1 million to 5 million. It really is awesome. I'm really happy about things like Coinbase and Robinhood to come out to get people to understand financial literacy and being able to compete with the institutions who've really showed a propensity to, now I don't want to say game the system, but control the system in a way that makes it very difficult for people to have money in their lives. Instead, money is being separated from people's lives. And that's why getting back to basics, getting to things that haven't been so interesting or boring business of mining, because it takes some time, has been extremely exciting. And I think it'll be even more exciting as we see the dynamics of the economy and markets really converge, and as we turn the page in our society of the human race and what's going in finance. So it's awesome. We'll see NFTs and all these different things come out, but I think it backs down to what is really money, and gold is money everywhere on the planet, everywhere in the universe.
Yep. So with that broader financial education, the sort of new generation of investor coming through, or perhaps the previously uninformed, have now had some time to get literate. They've got more access through these new platforms that's why we can see equity markets opening up a little bit on the mining side. and then potentially that trickles into gold as the sort of first metal, the first love, I guess. It's interesting. It's an exciting time for where this could be moving to. But I think one of the challenges that mining obviously has is how quickly mines can come online, this resource gap. As an investor, how patient do you have to be with your capital? Like, you think now is a good time to be buying assets, but people need to start thinking longer term about this sort of 3, 5, 7, 10-year horizons, even if you're talking about it, right?
Yeah, different portfolios have different timelines. Like my cobalt portfolio, I have like a 15-year portfolio on that. Some are really timely that are right now. Like, for instance, like I was saying, copper, gold, and other different assets. Lithium is really coming into its face. Nickel and steel because of nickel and vice versa. There's a lot of different assets. Even on the mineral side, it's so amazing. And I could say that you all cover so many of these brilliant companies that you would never be able to meet. I mean, I remember years ago, with the African assets, when you would be able to meet somebody, it would be almost forever and a day before you can see somebody coming from assets. But now with the advent of you and really, Zoom now and all these places I can meet with these companies and get a feel for them, get a feel for the management, which is even more important, because if the company is just running its business as a serial raiser and not paying attention to capital markets, I'll know it. I'll see it. I'll speak to the CEO. They'll know who I am. And I'll reiterate, because it's all about making it aware to the public markets of what this asset's all about and what this company is about. And if it makes sense to own, which I would say about 99% of the companies that you have to show are for me to own. The reason why they may not be is because it's hard for me to get into private companies right now because of the situation not being part of the capital markets. But the other 99% of them, I'm loving it. I mean, it really just depends on where you're going to get into, where you believe that the asset is in the time. And there's no reason why it's own. We have strong hands in retail. And as a retail broker, I'm going to bring my skills right to the political space in comptroller and lift people from poverty by putting money into their lives perpetually and making the barrier of entry smaller, so that when people push forward to thrive, they'll realize that they can be wealthy just the same. Because sadly, in my neighborhood, I'm downtown work today, but my neighborhood in East Harlem, there's a lot of people who still believe wrongly that they're poor because someone else is wealthy, that they're broke because someone else is rich. I'm here to tell people there's many different types of money, and money is always supposed to be available. It's always supposed to be global and moving. The problem is just the leaders and the people at top of these systems. Those individuals have been embedded in the system for decades, and now they have neglected because they're happy to collect all these dollars by keeping people in perpetual servitude. And the way to explain and change that is to get people to have money in their hands. And if it starts off from a Bitcoin blockchain to get regulated to having gold is the full value of real assets, so they can understand it as an asset class, then so be it, because I'm going to be the guy doing it.
Yep, absolutely. That's excellent. So an educational battle as well, really, and sort of bringing to light the opportunities. If we do get the chance to bring one-to-one back to New York physically in the fall autumn period of this year, which we might do, or certainly in 2022, you'll have to give me the tour. In person. It'll be great.
Oh, totally. And I'm going to be there. I'll have the office of comptroller. So I'll bring, essentially $250 billion into the room to be looking at assets for the people and pensions and insurance companies, because this is real. This is what people should understand to be in the portfolio. No longer just a 10% into your portfolio. You really should have a little bit more and be able to point and raise to really build up your net worth. I mean, that's what clients of mine who are billionaires, that's what clients of mine who are celebrities, that's what we're looking for. They're looking for that protection, and they're looking for appreciation. And if you can do it at the exact same time and still in this wild and crazy diverse portfolio and asset classes that are flipping around with all the momentum, it gives an air of stability and an air of caution that when people are adding more risk into their portfolio, that you can be safe and realize. And that's one of the things that has been provided from us and to us in the form of these hard assets. We just have to dig them into the ground, or go through the reserves that are currently there, and go through the process of FS and PFS and spot market, all these different things, all these different ways to organize the disconnect between the EV and the stage development to get it into your hands and own these assets for appreciation. So all these things come to mind. So yeah, you can't just exclude smaller companies and include just the majors. You have to look at the entire gamut all the way through. And that's what you guys at 1-to-1 really do very well, and just place it right for us, our other investors, on a silver platter. So you can take your pick, meet with the CEOs, the management team, the IR, everybody involved that helps make a decision and really make great decisions for people's portfolio. And that's what I'm going to do for the 300,000 people that I'm going to manage, just like I currently do for my clients who are multi-millionaires and billionaires.
Fantastic. And when's the date, Daby? Daby, for the
November 2nd. So November 2nd is election, and I will take office provided I win, which I'm positive I'm going to move 500,000 votes onto the other side of the balance sheet, or the other side of the tablet of political spectrum, to the side of victory, because people can never again have money separated from their lives. And we have money separated from our lives, we lose the individualism of humans. We lose what life is about. We become more of property, we become more of a slave to money, instead of having money as an access for us to move up and be advocates and thrive. We have to keep on moving forward, and we can never have money being separated from our lives. So that barrier of entry has to be smaller through education and through ownership. And that's what we have to do. That's what I'm doing. And I think that that's what you're doing so exemplary with 1-to-1 mining, because you're helping that financial education. You're helping individuals like myself who are in finance to share with the masses what's going on and what's important.
Absolutely. Excellent. Well, look, hopefully we can catch up before then, but best of luck with the continued campaign for November.
Thank you.
And thank you very much for talking with us, Daby.
Thank you, Adam. Thank you. And I'll just leave you with a nice shot